Now I would like to bring up our next company. Today we're honored to have with us Crane. We've got with us today Alcala, Chief Operating Officer, and Jay Higgs, Senior Vice President of Aerospace and Electronics for Crane. Crane is based in Stamford, Connecticut, operates two segments, Aerospace Electronics and Process Flow Technologies. Crane has 58 million shares outstanding, trades around $180 plus dollars for a $10.5 billion market cap and about $775 million of net debt pro forma for almost a $12 billion total enterprise value. We are honored to have you here today, gentlemen. I'll sit down and we'll have a discussion.
Thank you. Thank you, Tony, and good morning, everyone. My name is Alcala. I'm the Chief Operating Officer for Crane. Briefly, I would direct your attention to the forward-looking statement disclaimer in our handouts and the related content in our 10K and other SEC filings. All of these slides have been previously released, and I encourage you to review the full presentation from our March 6th investor meeting, which covers the business in more detail. The machine. That's what I want you to think about when you think about Crane. We developed a unique machine at Crane that drives profitable growth, the Crane Business System, driving a consistent cadence of innovation and productivity. The machine builds on the strong foundation that we built at Crane, and importantly, this machine is scalable to support accelerated inorganic growth. Our performance is strong and will only continue to get better. Crane has transformed over the last 25 years and today is a leading global provider of highly engineered products and solutions with differentiated technology, highly respected brands, and leadership positions in its markets. We provide mission-critical products for applications with high cost of failure, which drives significant reoccurring sales with about 40% of total revenue from aftermarket. Many of these products are specified into highly regulated end markets, further driving long-term customer attachment. Our two strategic growth platforms are Process Flow Technologies, serving the chemical, pharmaceutical, water and wastewater, and industrial end markets, and Aerospace and Electronics, which supplies proprietary sole source components for aerospace, defense, and space applications. We are well positioned for accelerating organic growth in large, attractive end markets with favorable secular trends, continued investment in new products and solutions, and commercial excellence. And we have substantial upside from capital deployment of our pristine balance sheet. Our basic investment thesis shown on this slide is fairly straightforward. We have a very global $2.1 billion business today, competing in attractive end markets with proprietary and differentiated technology. And we are positioned to drive solid mid-single-digit core sales growth that, with operating leverage, should generate double-digit EPS growth before potential upside from capital deployment of our strong balance sheet. And those metrics and goals are paired with an experienced management team that has substantial tenure at Crane and a long history of delivering consistently differentiated execution. Another critical part of our value creation story is the strength of the Crane Business System, or CBS, differentiated and rigorous, with now more than 2 decades of work to fully ingrain a culture of continuous improvement into all aspects of our business, along with a history of cadence and disciplined execution that has resulted in consistently excellent operational performance, and increasingly a key driver of growth as well. What is CBS? It is customer-focused, strategy-driven, a process to all things, extremely metric-driven. And how we drive it is through a strong process-driven culture, cadence, discipline, execution, and a relentless focus on continuous improvement. What makes us different is the intensity, focus, and accountability that we drive to get results. Importantly, our strategy is fueled by innovation and a focus on expanding in higher growth end market verticals, such as cryogenics, wastewater, and aerospace. Combined, this gives us confidence in a blended 4 to 6% core sales growth CAGR across the cycle. Higher at aerospace and electronics, where we have direct visibility to a 7 to 9% sales CAGR for at least the next decade, and a solid 3 to 5% long-term growth rate through the cycle at Process Flow Technologies, where the business continues to structurally shift its exposure to higher growth markets. That growth, paired with our consistent execution, should deliver operating profit growth at about twice the rate of core sales growth. Our innovation and focused end market strategy is supported further by our commercial and operational excellence. That discipline is not new to Crane. Our two strategic growth platforms are on track to have doubled margins over the last 20 years. That improvement has moved at an accelerated pace, particularly over the last 5 years. Notably, the most recent margin growth has also been driven and accompanied by strong sales growth. And given our outlook and normal operating leverage, we see substantial runway for margins ahead of us. And as mentioned, we have a strong and flexible balance sheet, as well as a long and successful track record as a disciplined acquirer. We believe that we have about $3 to $4 billion of capital available for acquisitions and/or repurchases through 2028. This estimate is based on a long-term net debt to EBITDA range of 2 to 3 times, a level we are very comfortable operating within. Given the fragmentation in our end markets, along with our rigorous M&A process, we are confident in our ability to add substantial value through capital deployment. Related to M&A, in June, we announced the agreement to acquire Precision Sensors and Instrumentation from Baker Hughes for $1.1 billion. PSI is a global leader in highly sophisticated sensor-based technologies for mission-critical applications in harsh and hazardous environments. These businesses are a perfect fit for Crane's existing portfolio, enhancing our product portfolio and technology capabilities in key target markets, including aerospace and defense, nuclear, industrial process sensing, water, and wastewater. This transition meets all Crane company strategic and financial criteria, including 10% ROIC by year 5. Following the acquisition, we expect to close by year end. We estimate that Crane will have a net debt to adjusted EBITDA ratio of approximately 1 time, leaving us with substantial capacity for further acquisitions. Now let me turn it over to Jay, who will walk through our aerospace and electronics business.
All right, thank you, Alex, very much. Good morning, everyone. My name is Jay Higgs. I'm the Senior Vice President here at Crane. I've been with Crane for 35 years. Most recently, I served as the President of the Aerospace and Electronics Group. With the recent acquisition of Druck and anticipation of further inorganic growth in this portion of our business, I've been kind of promoted to lead all new and existing businesses within our Aerospace and Electronics segment, if you will, going forward. So I'm going to spend the next few minutes really talking about the business, giving you a brief overview of what we do. So Crane Aerospace and Electronics provides market-leading solutions that deliver over $900 million in sales in 2024 at just over 23% adjusted operating margin, both of which have substantial upside opportunity in the coming years due to the ramp-up of new program wins we've secured over the past few years, which are going to be additive to our core business. Over 90% of our business is sole-sourced. 100% is proprietary. We have no build-to-print business. We own our design IP and manufacture and service our own products. Roughly 65% of the portfolio is commercial aerospace, 35% is military, defense, and space, 30% is in the aftermarket. We have brands with exceptional reputations and unique technology developed over decades. And in many cases, we invented the very technologies in our core markets that are now the industry standard. This slide highlights our 5 key solution capabilities, each of which allows us to develop mission-critical components and systems that are sold to either Tier 1s or direct to the OEMs. We are extremely capable in electrical power management, from very small, high-reliability, radiation-hardened power converters for space applications to very large power systems for ground and ship-based radars. The growth outlook for this business is very strong, given the continued trend toward electrification across both commercial and military applications, as well as the need for high power conversion and bidirectional power conversion, which is critical enabler for hybrid electric and fully electric military land vehicles and all future aircraft. Sensing and Control provides both wired and wireless sensing products and systems, which are being used in increasing quantities in the newest applications, with a focus on proximity, pressure, and fluid level. Fluid Management provides the most sophisticated and capable lubrication systems, fuel flow transmitters in the industry, as well as a growing liquid cooling business tightly integrated with our power conversion solution to manage the increasingly complex cooling needs of high-power electrical systems. In brake control, we invented anti-skid for aircraft, and there's never been a Boeing commercial aircraft without our anti-skid system on it, along with numerous other platforms from other OEMs. These are very complex systems that combine sophisticated sensing with computer-controlled hydraulic and electric actuation systems. And we provide signal processing, or microwave products, for complex communication and radar applications. Importantly, we design almost all of our technology to be modular and scalable to address the widest possible cross-section of customers within a single family of products and systems. This enables us to respond quickly and cost-effectively to customer needs, and that speed, in addition to our unmatched quality and reliability, enables us to win. As we've stated repeatedly over the past 3 years, we are highly confident in a 7 to 9% sales CAGR through the end of the decade, given our very strong position on virtually all commercial and military aircraft platforms, as well as new content which will ramp up over the next several years. We also have numerous defense programs now reaching full rate production. These include power systems for numerous AESA radar programs, each of which has a lifetime value to us in the 9 figures, an area where our power conversion capabilities have now become the standard, but where historically we didn't have a market presence. And as we get later into this part of the decade, we have a large portfolio of prototypes and demonstrator programs that we are working on with our customers that will drive incremental sales growth. A great long-term growth outlook in a business with strong operating leverage approaching 40%, providing significant margin upside in the years ahead. So to wrap it up, this is what I want to leave you with. And then building on the theme that Alex discussed early in the presentation, which is this machine that's delivering very unique and differentiated results in A&E. We have very unique technology and expanding product capabilities, and it's desired by a very wide cross-section of our customers. We continue our very strong organic sales growth, and we're accelerating that growth with inorganic growth as well. And then the year-over-year operating margin improvement that we've been able to achieve while delivering exceptional leverage. Thank you all for your attention today, and now I'll open it up for questions. Thank you.
Down here, if you'd like, Jay, have a seat with us.
Okay.
Well, Alex and Jay, thank you for that great overview of Crane. And I like Alex's discussion of intense focus, which I believe I can attest to, knowing Max and following the company. And I think I have some background in it with who I work for and where I used to work in the Marine Corps. I understand intense focus. Maybe you can share, and maybe this one goes to you, Jay. You can share Crane's overall vision for its aerospace and defense segment in the coming years, particularly considering the evolving global threats that we're seeing today.
Yeah, what we really like about our business is just the diversification of it all. I mean, there's almost no military or aerospace platform that exists today or will exist in the future that doesn't have our product on it. So we're very well positioned, obviously, moving forward with single aisle, wide body, the existing military platforms. But when you think about the new platforms, whether it's NGAD or CCA or military vehicle electrification, or the increase we're going to see in missile defense and radars. I mean, we have products on all that equipment. We have products on all those demonstrators. We're developing the systems that will be those future systems on those aircraft. So very well positioned with the existing portfolio. And then we have the technology in place right now at a high technology readiness level where we're pretty much the incumbent on many of those demonstrator programs that will become those future applications.
Yeah, it was pretty impressive seeing the business down in South Florida. Your radar microwave business. That's a lot of growth, I think, going on there after that Analyst Day. Something we haven't talked about much, but I think you guys always have was the view on COMAC, and I included the COMAC in our slides this year. First of all, just want to see how you think of this playing out. Any technology restrictions that might undermine this opportunity?
Yeah, so I mean, for COMAC, for us, C919, C929, we have a lot of content on the 919, obviously, everything from brake control to lubrication transmitters on engines to door sensor and slide system, tire pressure indication. I mean, it's an important platform for us. Right now there are no restriction placed that allow us to serve that market. Certainly there was some challenges here in the midsummer that not just Crane but all the industry had to work through. That's been resolved, and so we're well positioned there to continue delivering product and growth. And on the 929, we continue to bid the things that we can. So there's multiple systems on there that are similar to 919 that will bid, and others that are restricted at this time, and we follow the rules there obviously, and we'll bid. But the 919 is the most important platform. It's the single aisle equivalent, and we probably have actually our strongest content position of any of the single aisles is COMAC in terms of all the systems we have there, and we're delivering right on schedule right now.
Well done. Regarding defense and military, it continues to obviously be strong. What other contract opportunities are you pursuing? And then in regards to the F-16 brake control ramp up, how is that progressing?
Yeah, so the two big ramp-ups for Crane right now is one is F-16 M&U, and we are right on track. We've already delivered certification hardware to the Air Force. They're in the process of going to be doing their flight test here in fourth quarter. We've ramped up our factories to deliver at a very high rate. We're really excited about that program. I think we communicated it'd be like about a $150 million program for us lifetime. It's actually with foreign military sales much higher than that, probably about $200 million right now. So we're looking at accelerating our sales across the next seven or so years on that program, but well positioned to deliver here starting in fourth quarter and going into next year. The other big ramp up is IESA radar power supplies. Power conversion. Again, you saw our factory recently there in Fort Walton Beach, ready to deliver on the promise of all that volume, really ahead of schedule in terms of the investments we need to make there to be able to do that. And then parlaying that into vehicle electrification for the military land vehicles. Unidirectional, bidirectional power conversion is important for hybrid drives, traction drives, both primary and secondary power. We have lots of products there, again, that build off the IESA radar platform power supplies that we have that will be used in those applications. And again, we're on multiple demonstrators there like XM30. We'll have opportunities on CTT, the M1 upgrade. All those have our power conversion products on it. It's another huge growth area for us. And then in addition to that, it's just continue to develop the technology that will be needed whenever Boeing and Airbus are ready to launch NGSA. We're very well positioned there, working very well with both those companies to show the products that we have that are ready to help them enable some of the efficiency gains they need there. Our wireless products, turning sensors that are wired in the wireless takes weight out of the aircraft. More advanced anti-skid brake control that we're working on that has even more functionality than what we have today. Our lubrication pumps and fuel flow transmitters are ready today for those next-gen engine, whether it's an open rotor or it's more sophisticated, high bypass fan engines. Regardless of whatever direction that technology goes, we're prepared with product offerings for those companies.
And on the aircraft side, also, Jay, your CCA, your unmanned position.
Yeah, that's a great point, Alex. Yeah, for NGSA and CCA, again, we were on most of those demonstrators with anti-skid, with the fuel system, with thermal management, with products on the engines. And so, you know, with Boeing winning and some of these other platforms that are coming out, we've been incredibly successful there. And then you get into the unmanned arena, you know, starting to really develop a really good relationship with Anduril, providing the brake control and the Fury, and looking to provide other products to them as well as they build out their portfolio.
There's a lot going on there. And maybe some more, you know, missile orders you discussed earlier, then very strong at the primes. Does this feed, how does this feed, you know, through to you guys as upside? You talked about use of radar, obviously that's going to be controlling those, the fire control radars for that.
Yeah, missiles been great for us. I mean, we obviously do power conversion and microwave assemblies for, you know, navigation on missiles. We're getting a lot of inquiries on how fast we can ramp rate on some of those programs where we do both Patriot programs, we do all the SM programs. We're a lot of products on missiles. We won't be the long pole in the tent. I mean, we're ready to go. We've communicated that we can really ramp rates there with our prime and tier 1 customers, but you need every single product to actually ramp at the rate of a missile or a defense program, right? So we won't be the long pole in the tent, but we're ready to do that, and we see upside growth there. Everybody's talking Golden Dome. You know, that's another area where, you know, Golden Dome itself is stitching together a bunch of systems that already exist, right, for one common purpose. And again, we're on all those systems with our products. So to the extent that, you know, that gets funded appropriately and that's a growth area for us, we're certainly have multiple microwave and defense or modular power products on those platforms.
You know, maybe I'll open it up to the audience as time gets near.
Alex, you brought up CCA, right? I wanted to get your perspective on working with the new defense, as it were, right? These emerging companies, eVTOLs, the CCAs, et cetera.
Yeah, I mean, we're very active with them. I mean, it's disruptive, obviously, but you know, whether it's the Northrops or the Raytheons or the Lockheeds who are successful, or it's the Andurils or others who are successful, and we're prepared either way. We'll work with anyway with our technologies. Again, I think our technology are unique enough that, you know, typically someone like Anduril's not going to want to like try to duplicate that capability. And so we've done a really good job also of trying to come up with, I'll call like less sophisticated or COTS type versions of systems that can be used and deployed very quickly on demonstrators and platforms like that. I think Anduril Fury is a great example of that, where we were able to provide them a brake control like in 6 months for demonstration, just based on you know, scalability of the technology that we have. So, you know, we're very agile, we're very flexible, we're able to do things quickly, and in that environment, that's what they're doing. They are standing up prototypes in 6 months and flying things and demonstrating things and getting there that, you know, in the past seem almost impossible to do. And we're trying to model our business and create a business of our own that can meet the needs of those types of contractors.
So Jay talked about our engineering investments to create modular technology. So we think that gives us an advantage to really be able to meet those quick lead times, develop a brake control system in 6 months. So we like working with these higher requirements on speed. We think that will differentiate us.
Thank you. Do you have any content on the Bell Valor MV-75 program?
Yeah, we have a few systems there. It's not a major platform for us, but yeah, we do.
I know this is aerospace and defense, commercial aviation. PSI, what are the revenues you expect, assuming you close in January 1st? Is there a number that you've tossed out in terms of revenues, EBITDA, CapEx, and growth rates? Thank you.
Yeah, there are numbers. I think we're going to provide more breakdown here in January after we close. But, you know, roughly speaking, Mario, in this 5-year window to get to 10% ROIC, we expect to double the margins in that business. And, you know, the profile and growth will be supportive of our overall 4 to 6% profile for Crane. The EBITDA on year 1 as a percent will be below the average, but it's got all the fundamentals to become one of our best and most profitable businesses. So it'll become accretive from a margin standpoint in that 5-year period.
Maintenance CapEx, growth
It's consistent, with the profile for Crane. Anything specific. We don't have to move factories. We don't have to build factories. We don't have to do anything unique to drive the synergies there. So I will tell you, very, very confident on delivering that. Look forward to sharing more details on that in January.
Well, this has been a great overview of Crane. You guys have done extremely well. I've been following you for a while, and it's just gotten better and better. We're at a great time, and thank you for all your hard work and coming to speak with us and sharing what's going on. Well done. Thanks, Jens.
Great. Thank you very much. Thanks for your time.
Thank you.
Tony Bancroft is a portfolio manager for Gabelli Commercial Aerospace and Defense ETF. Michael Bergio and Daniel Gleam are research analysts at Gabelli Funds. The above webcast is a recording from the 31st Annual Gabelli Aerospace and Defense Symposium, which occurred on September 4, 2025. GAMCO is providing these links as a matter of general information. We do not intend for these links to be a complete description of any security or company, nor is it a research report with respect to any of the companies mentioned herein. As of June 30, 2025, affiliates of GAMCO Investors Incorporated beneficially owned 5.61% of Abdu Koman, 2.98% of Graham Corporation, 2.41% of Astronics Class A and less than 1% of Class B, 2.37% of Moog Class A and less than 1% of Class B, 1.38% of Textron, and less than 1% of all other companies mentioned. The analysts' views are subject to change at any time based on market and other conditions. The information in this posting represents the opinions of the analyst and is not intended to be a forecast of future events, a guarantee of future results, or investment advice. Views expressed are those of the analyst and may differ from those of other GAMCO officers, analysts, other employees, or of the firm as a whole. Because the investment personnel at GAMCO and our affiliates make individual investment decisions with respect to the client accounts that they manage, these accounts may have transactions inconsistent with the information contained in this posting. Certain GAMCO personnel may know the substance of the posting prior to its posting. This webcast is not an offer to sell any security, nor is it a solicitation of an offer to buy any security. Stocks are subject to market, economic and business risks that cause their prices to fluctuate. When you sell shares, they may be worth less than what you paid for them. For more information, a prospectus, or summary prospectus, visit our website at www.gabelli.com or call 800 Gabelli 800-422-355-4914-921-5100 fax 914-921-5118 info@gabelli.com. Tony Bancroft is a portfolio manager for the Gabelli Commercial Aerospace and Defense Fund. This ETF is different from traditional ETFs. Unlike traditional ETFs, this ETF will not tell the public what assets they hold each day. This may create additional risks for your investment. For example, you may have to pay more money to trade the ETF shares. This ETF will provide less information to traders, who tend to charge more for trades when they have less information. The price you pay to buy ETF shares on an exchange may not match the value of the ETF's portfolio. The same is true when you sell shares. These price differences may be greater for this ETF compared to other ETFs because it provides less information to traders. These additional risks may be even greater in bad or uncertain market conditions. The differences between this ETF and other ETFs may also have advantages. By keeping certain information about the ETF secret, this ETF may face less risk that other traders can predict or copy its investment strategy. This may improve the ETF's performance if other traders are able to copy or predict an ETF's investment strategy. However, this may hurt the ETF's performance. For additional information regarding the unique attributes and risks of this ETF, see the Non-Transparent Exchange Traded Fund ETF, Structure Risk, Early Close/Trading Halt Risk, and Authorized Participant and AP Representative Concentration Risk in the Principal Risks section of the prospectus. Exchange-traded funds, ETFs, are bought and sold through exchanges trading at market price, not NAV, and are not individually redeemed from the fund. Shares may trade at a premium or a discount to their NAV in the secondary market. There is no guarantee the investment strategy will be successful. Investing involves risk, including the possible loss of principal. Premiums or discounts are the differences, expressed as a percentage, between the NAV and market price of an ETF on a given day, generally at the time the NAV is calculated. A premium is the amount an ETF is trading above the reported NAV, expressed as a percentage of the NAV. A discount is the amount an ETF is trading below the reported NAV, expressed as a percentage of the NAV. The prospectus/registration statement shows the frequency of distributions of premiums and discounts for these ETFs for the most recently completed fiscal calendar year and all completed quarters of the current fiscal year. Investors should carefully consider the investment objectives, risks, charges and expenses of the ETF before investing. The prospectus, which contains more complete information about this and other matters, should be read carefully before investing. To obtain a prospectus, please call 800 Gabelli or visit www.gabelli.com. Risks to the ETF include a downturn in commercial air travel, production and/or supply chain disruptions, decreases in defense spending, subcontractor financial health, and competition and/or technology changes. As of June 30, 2025, the common stocks of Boeing, Ducommun, Curtiss-Wright, Moog, 5.55%, 4.54%, 4.26%, 3.69% of the fund's net assets, respectively. As of June 30, 2025, affiliates of Gamco Investors Incorporated beneficially owned 5.61% of Ducommun, 2.98% of Graham Corporation, 2.41% of Astronics Class A and less than 1% of Class B, 2.37% of Moog, Class A and less than 1% of Class B, 1.38% of Textron, and less than 1% of all other companies mentioned. Distributed by G. Distributors, LLC, a registered broker-dealer and member of FINRA.